8 influencers, different approaches. Some had a good run and even outperformed Bitcoin, most were doomed from the start. I'll show you why. Each portfolio starts with 10K, split evenly across the picks, or allocated as outlined in their videos. Performance is tracked from the video's release date. All of today's portfolios were published near the December 2024 altcoin top. Let's take a look at Alex Becker's AI portfolio, the one he revealed back in late November 2024. This was just before the peak of the altcoin hype, right after Trump won the election. Becker finally ditched gaming, which had been underperforming for a long time, and went all in on AI instead. He built a 14-coin portfolio stacked with smaller cap, high-risk AI bets. Some of the bigger names included EllioTrades, Prime, and Desync. But most were micro-caps under 100 mil, like Palm, ZKML, and Pinlink, aiming for maximum upside potential. In USD terms, the portfolio had a brief spike thanks to the final leg of the altcoin rally in mid-December. But after hitting a high near 13K, it's been a brutal downtrend. The chart shows an almost uninterrupted slide, bottoming just above 2K in April. There was a small bounce in May, but as of now, the portfolio's still deep in the red and far from break-even. In BTC terms, the story's even worse. It dropped nearly 80% versus Bitcoin. The early months were a complete collapse, and even now, there's been no real bounce or trend reversal. The only silver lining is that the price has moved mostly sideways since March, maybe forming a bottom. But for now, that's just speculation. Coin by coin, there are no bright spots. Every single token is deep in the red. Most are down 70% or more. Even the relatively more established picks like EllioTrades have dropped over 60%. It's a textbook example of what happens when you buy into peak hype. Crypto pumped after Trump's win, but once the narrative cooled off, most coins had no floor and just kept bleeding. That's always the risk with influencer portfolios launched during hype cycles. People chase those picks at the top, and when sentiment flips, there's nothing to hold them up. Becker went full risk on, and the result speaks for itself: 14 coins, all down badly. There's also a broader takeaway. Even if you back a strong macro narrative, and AI definitely qualifies, buying the top kills the trade. Narrative strength can't override bad entry points. And beyond timing, there's the issue of relevance. Becker's picks fit the early 2024 AI wave, but by late 2024, the narrative had shifted toward AI agents. His portfolio wasn't aligned with that rotation, which capped its upside. So while skipping the gaming narrative was a good move, his AI bag missed the real momentum. That's reflected in the BTC chart. Even as the market pushed higher into mid-December, Becker's portfolio couldn't outperform Bitcoin. Now someone new on the channel Lab of Crypto. She popped up in my comments a few times and got a bunch of upvotes, so here she is. Her portfolio video came out on December 15th, basically the exact top of the altcoin market. And compared to Becker's high-risk AI portfolio, this is a completely different strategy. She's holding 37 positions across multiple narratives. A big chunk is in large caps, BTC, ETH, and SOL, but they only make up 16% of the portfolio. The rest is spread across smaller caps. One odd detail: the percentages she listed only add up to 90%. 2 coins weren't available at the time, so we're working with 86% allocation. For simplicity, I've added stablecoins to fill out the rest, which honestly helps soften both the upside and the downside. Bitcoin's price hasn't moved much since then, but her portfolio has been cut in half. Without the stables, it would have done even worse. And here's the core issue. If you're holding 40 coins and the market doesn't give you a proper alt season, unless you somehow catch a 100x, you're almost guaranteed to underperform Bitcoin. That should be obvious, but clearly it's not. The more coins you add, the closer your returns drift toward the average, and altcoin performance on average has been lagging Bitcoin for years. If you're trying to beat BTC, the only viable strategy is to concentrate on trending narratives. It's still tough, but at least you have a shot. Spreading yourself too thin is a guaranteed bleedout in BTC terms. Third today is Crypto Banter's Ran, a guy who loves to shuffle his portfolio. I've already covered some of his picks before, and honestly, it feels like he's holding a completely different set of coins every few months. In this round, his thesis covered a lot: Coinbase, Base Chain, DeFi majors, RWAs, ETH outperforming BTC, AI agents beating out memes, and a gaming comeback. He bought Coinbase stock, Aerodrome, Ronin, Beam, Cpool, Link, a bunch of AI agent plays, ETH beta projects, and Bitcoin runes. Some picks had a solid run after the video, like AIXBT, but they eventually collapsed. Overall, most of the positions got crushed, with the portfolio down as much as 75% in early April when the market bottomed. One standout was AI16Z. It did a 4x after Rand mentioned it. AI agents really led the late 2024 rally. Even with a late entry, they outperformed the market while it lasted. But when the bubble burst, those coins fell harder than everything else. AIXBT is bouncing back now, but AI Fund turned into the worst performing coin in the whole portfolio. And here's the kicker. Even with a few winners, most didn't hold up, and you can see it clearly in the BTC chart. The portfolio went sideways, then lost about 70% of its Bitcoin valuation. This cycle, only a handful of narratives outperform BTC at any given time. Spreading bets across 5 narratives might sound smart, but without a full-blown alt season, it just doesn't work. Next up, Jung. His portfolio went through a complete transformation. The version from late 2023 was plain, simple, and safe. But in his December 14th video, he revealed something very different. While he mentioned more coins casually throughout the video, I filtered out the noise and focused on the ones he expressed clear buying interest. He also mentioned a Pudgy Penguins NFT, but I skipped it. It was too expensive to include in a 10K portfolio. That left us with 9 positions. Mostly lower cap meme coins and AI agent plays, with a few safer picks sprinkled in. What stands out is how narrative-driven this portfolio was. Aside from Simi and Link, everything else was laser-focused on the most hyped themes at the time. His meme picks got crushed, no surprise there. But his AI agent bets are holding up better, especially after the May recovery. As we now know, the strongest meme coins from the April lows were SBX 6900 and Fartcoin, both up since December, but they're clear outliers. It's brutally hard to know which coins will hold up months down the line. Still, Brian managed to pick Virtuals, AIXBT, and SUI, all showing relative strength despite tough market conditions. That's 3 out of 9. The rest is dragging things down, making the final result not much better than the over-diversified portfolios. And in BTC terms, it's even more brutal. The portfolio lost 70–80% of its Bitcoin value within just 2–3 months. What's wild is that almost none of the popular influencers allocate even 50% to Bitcoin. Their portfolios keep bleeding out in BTC terms. Some are even down in USD, while Bitcoin itself has gone up in the same timeframe. Yet they still go all in on alts in these portfolio showcases. Now we have Lark Davis with a portfolio from December 25th. He went with a mixed approach, half allocated to more established projects, mostly L1s, and the other half in riskier plays. One coin, Gun, wasn't available at the time, so I left it out. The larger caps have held up better than the small caps, confirming they were the safer bets in these tough altcoin conditions. That said, the chart is still brutal. We've seen this pattern before, and here the portfolio barely moved off the April lows. Compare that to Brian's AI agent picks, which saw a solid bounce. Lark's choices in that same narrative, AI16Z and Zerebro, are still struggling. It shows how much it matters which coins you pick within a hot trend. The more obscure the choice, the more likely it gets forgotten once the hype fades. The Bitcoin chart tells the full story. Since early January, this portfolio has only moved one way, down, mixing safe but off-trend picks with weak selections from emerging narratives led to this disaster of a BTC performance. Next is Elio Trades and his portfolio from November 27th. Finally, someone with a relatively high allocation to majors. Even though the market was heating up, Elio didn't go full degenerate with low-cap gems, so compared to others we've seen, he gets some points for that. Bitcoin made up 20% of the portfolio, which, in comparison, feels like a lot, and alongside that he held ETH, Sol, Coinbase stock, and MicroStrategy. Altogether, that's over 50% in majors. Worth noting, it would have still been better to just hold Bitcoin. I skipped a few positions. NFTs, anything unavailable on November 27th, coins with no specified allocation, and one stock that wasn't tracked by drop stabs. That stock made up a small portion, so it doesn't affect the overall picture. The risk-on half of the portfolio was spread across L1s, AI, gaming, and memes, all underperformers relative to BTC and the majors, which is expected in a risk-off environment. On the USD chart, this portfolio holds up a lot better than the previous ones, partially thanks to the USDT allocation, but mostly due to the heavy weighting in majors. Those held value far better than small and mid-caps in recent months. The Bitcoin chart tells a familiar story, but not exactly the same. The drawdown in BTC terms is noticeably smaller. While previous portfolios lost more than half their BTC value, this one held up better. That said, it's still bleeding. The chart might be forming a bottom, but that's speculation. It's been over 6 months since Elio published this, and there's been no sign of strength versus Bitcoin. Slower bleed, sure, but still bleeding. And unless we get a full-blown alt season, it's hard to see this flipping positive in Bitcoin terms. Miles Deutscher, let's look at his AI picks from the video he dropped on November 28th. This one's especially interesting, and you'll see why. Out of 10 coins, only 2 were relatively safe, Tau and Near. The remaining picks were full risk-on, with Miles going straight for maximum upside as the market flashed early alt-season signals. That alt-season never came, but even so, the USD chart is worth a look. The portfolio doubled in less than 2 weeks before the breakdown began. Once the market turned risk-off, the portfolio tanked, losing almost 90% from the peak. This is a textbook example of what happens when you actually pick trending coins instead of spreading across every narrative in the name of safety. The Bitcoin chart makes it even clearer. During the risk-on window, this portfolio nearly 2x'd against BTC in a matter of days, but the drawdown was just as sharp. By the April-May bounce, these coins weren't performing anymore. The momentum was gone. That's the reality of chasing trends. Miles nailed the narrative going into December, but a few months later, most of these coins weren't relevant. Some are now down over 90%. This kind of portfolio can outperform Bitcoin, but only if you time it right and manage risk. Holding risky alts long-term rarely works. They go out of fashion quickly. Even if the market flips risk-on again, there's no guarantee these coins are still in play. That's where risk management comes in. A simple stop-loss, say, at this point here, could have preserved gains. Sell the alts, rotate to BTC, and exit the downturn with more Bitcoin. In my view, when safety is the goal, just hold Bitcoin. But when going for outperformance, you must be ready to cut losses. Otherwise, that minus 90% drawdown is almost inevitable, and recovery is far from guaranteed. Next up, House of Crypto. He dropped a portfolio video on November 30th with coins he personally holds for the biggest potential gains. It was a relatively simple portfolio of 10 coins, a mix of L1s, gaming, RWA, and AI, and right away you can see the contrast with what Miles shared. These safer picks moved up much less in the early stages of the rally when the market was in full risk-on mode. The drawdown wasn't as brutal either. This one bottomed around minus 70%, while Miles' portfolio went a bit lower. But again, the obvious takeaway, just holding Bitcoin would have performed better. Instead of being 50–70% down, you'd actually be in the green over the same period. There's another interesting point. The recovery from April to May was similar in percentage terms to what we saw with Miles' higher-risk picks. So why was the difference much bigger in December and not as wide during the recent bounce? 2 main reasons. First, safer, bigger-cap coins like the ones in House of Crypto's portfolio don't go out of fashion as quickly. Each new wave in crypto brings new shiny objects, and those tend to dominate. Second, in December, sentiment was getting greedy. People were reaching for more risk. In April and May, the bounce was quick and short-lived, so the market didn't have time to go full degenerate. That said, there were exceptions. Some memes and AI agents ripped. Fartcoin, SBX 6900, Virtuals, AIXBT, all had strong runs since the April low. The meme index I shared a while back actually outperformed Bitcoin and pulled off a 2x from the lows. But back to this portfolio. The BTC chart looks just like the other diversified portfolios, a modest move up at first, followed by a sharp bleed. And even the bounce from April to May didn't recover half of what was lost in Bitcoin terms. So here's the conclusion. If you'd split your buys 50% at video release, 50% at the April bottom, you still wouldn't be back to break-even versus BTC by May. Meanwhile, memes would have done it. They did a clean 2x against Bitcoin off the lows. Bottom line, if safety is the priority, Bitcoin is the only consistent choice. Altcoins almost always lose to Bitcoin over the long term, so holding them without a clear plan rarely works. Outperformance is possible, but it requires precision. Without strong risk management, you're almost guaranteed to see minus 50, 70, even 90% drawdowns against Bitcoin. Spreading across too many coins and narratives just drags performance closer to the altcoin average, which has been terrible and most likely will stay that way most of the time. During risk-on periods, trending coins can absolutely outperform, but they fall just as hard. If you're going to take the risk, manage it or stick with Bitcoin. That's all for today. Numbers don't lie.